Good morning, good afternoon, and good evening to those of you around the world. Welcome to Trading Rebellion with your favorite analysts from Trade the Chain. My name is Nick Mancini, joined by CJ and Monte, all analysts at Trade the Chain. We are here to break down everything going on in crypto, TradFi. I don't know why I messed that one up. Equities, macro, and everything in between. Let's go ahead and kick off things with the Trade the Chain dashboard. Total market cap is slightly down from when we chatted on Monday. Average sentiment across the board is neutral. Bitcoin just dipping into that neutral territory from bearish. Ethereum, don't know why this is bullish. A lot of ETH BTC longers are not having fun. So we'll dive into that one a little bit later. But as you can see, most crypto assets are more or less down in the past 24 hours. But, there are a lot of degens on Twitter talking about things. So there's plenty of action to be had. Loom up 28% today. BTU Bake, this is always worrisome when we're seeing the absolute, quote unquote shit coins really ripping. And, some of them are actually, flipping bearish in terms of daily sentiment. So possibly some good short opportunities here as well. If you're thinking that everyone's bearish, but price just pretty much melted all the shorts, maybe you get some good short opportunities if you start to form a bit of a local top. So most bullish coins are not feeling the bull too much today. And then obviously those bearish coins is I think people are going to really want to start shorting some of those recent launchers. And MXC, which is MEXC's token, a lot of exchange inflows recently. So I would watch out for some interesting price action for that over the next 24 hours. Then obviously you got some interesting what comp has been a weird runner as of recent. And then stablecoin flows, definitely more stables added in the past 24 hours than left. So hopefully we see a little bit of buying on the dip that we got today. One last thing is this is the Trade the Chain coins page. Nothing too much to glean from this. We're seeing tweet volume pick up. Some trading volume is picking up on the top 10. I would say that's definitely due to a bit of the volatility this morning, but nothing too crazy today. No insane 24-hour changes, but we do have some good weekly changes. Sol, one of the strongest ones on the market right now, but doesn't look like any significant movement is coming in the next hour or two, as exampled by our 1 hour projected range. So let's go ahead and dive into some of the big assets and figure out what's going on. We do typically start with the dollar. And interestingly enough, this is obviously pulling back, but we're not seeing too much bullishness out of Bitcoin or equities. So what do we make of this? Is this just, everyone's kind of running for the hills at one point in time? What do we make of this, CJ? Any interesting thing, any interesting positioning data on your end? I'm kind of feeling like, we'll probably end up back at this 106, 105.9 level by the weekend. But are you seeing anything weird on your end?
Yeah, I think there's an opportunity, not necessarily short the dollar, but I am somewhat synthetically short the dollar via long other currency pairs that I could talk about in a little bit. But I would like to bring up some positioning data just on the dollar, because I think it's worth showing how much longs actually bought into this trend near the recent high, large speculators. So literally in the last couple of weeks, you can see this green line of large speculators going all the way up to this 93 mark, which is very close to being a very crowded trade. Whereas, the inverse crowded trade was those same entities being short virtually all year and, into these lows. So that's a very cautionary thing, because if they get trapped up here, like what we've seen in equities, like what we've seen in the Nikkei, like what we've seen in energy, these moves happen very violently in certain cases, and they don't allow the trend followers, or the majority in this case, a relief bounce to really get out. So, that's what I'm seeing in terms of the dollar. Now, speculators can always theoretically become longer, but at this point, it does look a little bit vulnerable, certainly, and that's why I've taken positions in. Well, I'll let Monte. I don't want to steal his.
No, you're good. Please pull up the Swiss franc if you don't mind. Like you said, I don't have a position in DXY, but I am synthetically long the dollar via the Swiss franc. And the reason why is for this one, it's pretty simple. One, like CJ just went over, the COT data positioning. You got max shorts, and whenever you have that at the bottom of a downtrend and defined risk, those are two of the check marks that I want hit when I'm entering a trade. So we got the defined risk, we've got the crowded element of it, and it is very crowded. So kind of like almost with the inverse, what CJ was just talking about with the dollar there, I think all of that could be said about the Swiss franc. And therefore, I went ahead and I took a long position with a little bit of leverage. And my goal is to ride it up to about the $1.25 level. I think that is a plausible trade. It would be kind of almost a mean reversion if we're talking like a longer term moving average. But for the most part, I think that's a very plausible move. And then we get rejection. Or if the dollar breaks down, that could be a breakout point. That could be an inflection point. So watch it. Keep your eye on that 200-day moving average. Keep your eye on those COT oscillators, because right now this is a very crowded trade with defined risk, and that's what I like to see when I'm entering a long trade.
If you look at the euro, just last thing, it has a very similar setup. So when you're seeing confluence of those other assets opposed to the DXY, I think it just adds, like I said, confluence to the trade.
Most definitely.
All very good points. It'll be very, very interesting to see what happens with the dollar, especially with the, bonds were very much in the main conversation earlier this week due to the jump. And obviously we saw them relax a little bit midweek, as obviously exampled by the dollar. And I think many wanted to get long risk, and clearly that's not working out right now, which I think is definitely a sign of a greater problem. So let's move it over to equities futures, and let's start with this daily chart, because I think this has been kind of the chart that's been able to give us the most information. And we talked about this on Monday. This 1 day estimated trading moving average was holding price up. And then Tuesday, we just shot back down. So we did end up we didn't tag it exactly, but kind of that 41.96 level that I had lined out, which obviously lines up with the February 1st or February 2nd.
Nick, I'm sorry to interrupt. Were you?
I'm not. My screen's not up.
Yeah, I thought you were meaning to share.
My apologies. So I'll reset there very quickly. 1 day estimated trend moving average. We broke down beneath it on Tuesday. We're now coiling underneath it. And of course, we did, end up tagging that February high that we've been talking about for quite some time, being kind of a long-term, downside target. So we hit our targets. And now we're kind of in this little, what I call a demand zone. So you've basically got a lot of trapped liquidity down here. Shorts are trapped, longs are wanting to enter. And then you really need to get above this 1 day estimated trend moving average to kind of basically form your little inverse head and shoulders. And then move up to, maybe I think that's maybe a bit of a higher target, but maybe something around, 4,300 or at least 4,330, 4,300. So that's, what I'd hope things look like. But obviously if the dollar, if we can't move any meaningfully higher on a dollar drop back, and then the dollar finds more legs, you would definitely look for a break down here of this 4,200 level. And then that would be kind of your signal for a move lower. So I don't really have too much on this chart because I haven't seen a clear rejection off the 1 day estimated 200 moving average, but you obviously it's not accepting either. So you're kind of in this wait and see moment. And I think, my opinion is that the unemployment data is going to be very, very significant tomorrow due to Jerome Powell's very specific words of unemployment under 4% is not good. And and basically what he's implying is there's going to be further Fed tightening if the unemployment rate doesn't move up towards that 4% metric. And we're expecting 3.7%. And we had a beat on ADP employment, which implies likely a lower unemployment number. So it's going to be very interesting to see what happens tomorrow. I think we also have a lot of Bitcoin and Ethereum options expiry that we'll kind of talk about in a little bit, but let's bring it back to equities. What are we thinking here? I personally, and I hope you guys agree, that it's really a wait and see. I don't think there's any move right now that you want to take in one direction or the other until you see some more data come in. But it's not looking good, in my opinion, if we are stuck under this 42 kind of 75 number. at least just to give it an exact kind of point of reference. So what are you guys thinking?
Yeah, I'm going to be curious to see how people are positioned tomorrow when we get the COT data, see if people have, actually still trying to, ride this market higher, or if they are trying to short it lower. I think if we still see longs trapped, then, that moving average will be significant resistance and we won't get above it. So really it all comes down to, like, I think how many longs are still kind of trapped in this market. And in my opinion, there are still quite a few. So I think that the more likely scenario is a continued sell-off, a continued gradual sell-off as those longs are forced to capitulate. But we'll find out tomorrow as we get more information from the commitment of traders data.
Yeah. I guess the only thing I would have to say is that, when you're sizing up a trend in terms of technicals, the sad reality is that everything's always going to look bid at the highs and it's always going to look awful at the lows. However, I do want to talk about some data of potential like sentiment, because Monte, I totally agree. And I think he's right when he says it's very important to wait for that data tomorrow. But what I want to share is just some equity put call ratio data. We talked about this a little bit earlier this morning, and I might sound redundant, but I just wanted to bring up this one particular statistic where if you compare times where we've hit levels above 1.5 in the equity put call ratios, on average, 1 week, you're down 1% after the signal. I believe we got the signal like a day or two ago. However, a month, between 1 month and 3 months, the S&P averages positive returns between 1 to 6%. And for the NASDAQ, average returns are in the range of 2.5 to 9% in the 3 months following equity put call ratios hitting these levels. So of course we could go lower, but this is a reflection of sentiment, and clearly people are, we talked about buying puts as insurance on crypto equities this morning as like a hedge to Bitcoin holdings. It looks like a lot of people are doing similar things with potentially their S&P holdings. So that's definitely notable and just something to kind of keep in mind as we move on here. Oh, damn it. Was I not sharing?
No, you were sharing.
You were.
Okay.
Yeah, so I think, tomorrow's unemployment data will definitely give certainly some momentum into next week, in my opinion. So unless you have a very, very strong opinion of equities today, probably better to chillax. Longs definitely looked good yesterday, but, definitely seeing a little bit of rejection around that weekly VWAP today. So we're stuck in value, which is not the worst place to be in the world because we'll eventually extend outside in one direction. But I think, tomorrow's data should be a bit of a tell for us. So let's move it over to Bitcoin. Oh,
just one thing. Yeah, I mean, I just think about like the macro assets of kind of the picture of what's coming together right now. You kind of have this, one of our old bosses like to refer to this as like the fever it needs to break. You remember what I said, Monty?
Yes.
The DXY fever visa. Yeah. Okay. All right. Reluctantly, but yeah. So yeah, I think we're starting to see the fever break in things like the TNX potentially. I don't want to speak too soon, but you're starting to see it as well in things like the dollar and other risk currencies. And, now obviously put call ratio. So all of those factors of extreme fear and maybe a potential inflection point that we saw in the last day or two, but it's still. And I think risk to reward favors the long side. That's all I'll say. That's really all I can add to this point.
Yeah, that's definitely the main takeaway, I would say, from that put call equity ratio data. I mean, whenever you have it's like I always go to the same analogy, but it's like gunpowder. And that's kind of what it reminds me of, is like, the gunpowder is piling up, and when you see it get above that threshold, right? That's where you're starting to deal with like a dangerous amount of gunpowder. That's when OSHA is going to be coming in and doing a safety check, because an explosion could be imminent. And I think that is actually a possibility for the equity markets. We have so many people writing protective puts that, if the market just trends sideways for a week, they'll be forced to capitulate and we'll squeeze higher. So I think that is a very likely scenario. And from a risk reward perspective, I completely agree with you, CJ. That's all you can really ask for is good risk reward. And I think that that's what you get from looking at that data.
All very good inferences, and we do love our comments, from those who watch us, and we very much appreciate the opinion, Jenna. I will say I'm going to have to respectfully disagree, just because of Jerome Powell's very pointed statements and the conversation around whether or not there's going to be one more hike or not, and we're still kind of in that sketchy territory of, if there's not a hike, maybe we get some bullishness. If there is a hike, that could lead to more bearishness. So I could be proven wrong tomorrow. So we'll definitely have to see. But I do think it's something worth having the CNBC on or keeping your Twitter notifications on for. So let's move over into Bitcoin, which obviously got cut back today. Let's get our faces back on screen. So Bitcoin jumped up, obviously, and this was pre-open too, which adds to the sketchiness. Pre-open jumped up to 28.1, 28.2, depending on your exchange, and then got cut right back down after the open. So I will say I did not expect the squeeze to happen pre-open. I thought that would be something that happened around open, but moral of the story is, this whole purple area is value. So we're still sitting inside value. But we're unable to get above this 28.1 level, which if I zoom out, coincides with the high from the grayscale candle. And obviously, if we even look at the 4 hour, look where the wicks are on everything. It's right under the weekly VWAP. So anytime we're moving up into trying to get the other half of the liquidity inside of value, we keep getting, killed. So what this is showing me is that there's a lot of trap liquidity between 28.5 and pretty much 28K. And you could even bring that down to kind of 27.8K. So anytime we jump up there, if you see swift rejections, it's not going to look pretty. And I think that's something to keep in mind moving forward till we can confirm above this weekly VWAP, it's going to be trouble above the 27.8K level. So at least in the short term, to me, we are forming a bit of a local bottom here above the 1 hour estimated 200 moving average. That's certainly, what you want to see if you are a bull. So chances are increasing of at least maybe a snap back to 28 or 27.8K. But again, if we deviate above that, now you're starting to form, what looks to be kind of a head and shoulders on that scale. And so I would expect, another rejection from 27.8, I would expect to send us back down to these lows or at minimum the Monday low, because we've obviously been unable to sniff the Monday high. So I think your chances of a little rebound look good, definitely risky, but definitely look for more shorts to come in around this 27.8K level. So Monte, CJ, what are you guys thinking? Any trades for you, or are you kind of wait and see as well after today's volatility?
Well, for me, Nick, I think one of the most important charts, or one of the most important indicators, I should say, is the 200-day moving average. And we are hitting that resistance hard. And in the past, it's been exactly that, strong resistance. And the subsequent price action following the hitting the 200-day moving average has not typically been favorable for Bitcoin. We did come up a little bit here, but still, I think that this does not look great. That in conjunction with, not so hot sentiment. We started the day with some pretty strong sentiment. Of course, I was, met with some nice price action, but now that we're flipping negative, I think people are really losing conviction in the fact that we can break above this highly critical 200-day moving average. And without getting above this level, you're essentially just kind of flipping a coin and you're just getting chopped up in this zone here. So what I'm kind of predicting for Bitcoin over the next week and a half, 2 weeks here is just some consolidation below the 200-day moving average. And basically just like this, we kind of just shop around in this range. And it's not going to be easy to trade, but then I do think the 200-day moving average will start to roll over, and you'll see it act as resistance once again, and this trend will break and we'll start to head a bit lower. But that being said, we could see, a few weeks of consolidation before we plausibly go downwards, just because of the fact that there are going to be people that try and short this market, and they are going to get squeezed out, and that kind of acts as, a little bit of a that gives Bitcoin a bit of buoyancy in an otherwise, kind of lackluster market. So I think this is a likely scenario for Bitcoin. The 200-day moving average has proven itself time and time again to be a very critical metric to watch out for. And I think that this right now, we don't have the strength to break above such a significant hurdle without any news or any significant inflows of equity.
At no given day does Bitcoin need a pump. It was preordained. Nah, I'll stop. However, I guess I might as well give the counter argument to you Debbie Downers and this 200-day moving average thesis, which I totally get. I'm just kind of being a little facetious. But technically, points for the bulls, I would say we're still making higher highs on the daily chart. A lot of people still expect that level to be rejected. There's a lot of momentum funds that will likely, or momentum traders that will likely buy into a close above the 200 moving average should we be able to actually break above it. And then you have the factors that we kind of discussed earlier with macro, where you have, G7 currencies outside of the dollar starting to turn up, and risk assets might, get some relief. Even if they don't go to new highs, they could get some relief after massive fear and panic. And, that includes Bitcoin. Final point to just say is, like, you look at the relative performance of the crypto equities, they're outperforming the NASDAQ today. They're also outperforming Bitcoin. Coin is actually green on the day, but you also have similar things in Riot and Mara. So, a lot of, I think there's decent arguments to be made on both sides. So just wanted to put forth that devil's advocate.
Don't get me wrong. If we do close above the 200-day moving average, if we can get a candle body close above that, I think that'd be massively bullish. And really, that would be all I needed to see to buy in and be convinced that maybe that this is more than just a little bit of a short squeeze rally, that there is some actual legs behind this. Because like you said, CJ, I think a lot of other people as well will kind of be in that same mindset of buying above the 200-day moving average, because historically that's been probably the most successful trading strategy there is just buy when it breaks above the 200-day moving average and sell when it breaks below it, really.
Yeah, and the Trade the Chain account has been putting out some great Bitcoin analysis in the morning, and I retweeted one this morning and added some commentary, and I think it will end up ringing true. Could change tomorrow if unemployment data is absolutely insane, but I think we're going to be stuck between 27.2 and 28.2 for the time being. More than likely, could be wrong there. Welcome to fade me, but equities are kind of stuck in that little tight range, and I think to what Monte said, it's very, very likely that we just torture both breakout traders on both sides. So everybody wants to long 27.8, 28K. Everybody wants to short 27.2, 27K. And it may not come to fruition. So we could see a little bit more downside today. But that 1 hour estimated 200 moving average, as well as that Monday low right around 27.2, should act as, some sort of support, at least heading into tomorrow. So let's go ahead and talk about ETH, because ETH BTC made a new yearly low. ETH BTC absolutely getting clobbered after the lackluster performance of the ETH futures ETF. I think they did, a significant more amount of volume yesterday and Tuesday, but Monday I think they did, less trading volume than some of the more crappy NFT collections. We're not talking millions. We're talking like 500,000. So that's not good if you're a top ETF provider. So also, before we dig in, Mike said we'll be fading you. So appreciate that, Mike. We'll see how that goes. But no matter the comment, I appreciate the participation.
Wait, just to be clear, what was your play into the?
It wasn't exactly a play. I was just saying, I think
I'm just messing with you, man.
but short 27.2, Mike. But at your own discretion, I will not be providing a refund link for you. So, but let's back to ETH BTC. So new yearly low. We had that last line drawn, so I guess we're going to go ahead and draw a new line down here. But this is not looking good. It's pretty much the last ditch attempt was Monte's long, which we completely rejected and made a new low. So any kind of idea about a deviation is pretty much getting washed away. And if we zoom out, it is more likely than not that we end up trickling down to the 055 level, although it will likely take some time. So back to the ETH USD chart, clearly much weaker than Bitcoin. We dropped a whole nother level today. And we actually dropped beneath the support level that I had lined out. Now it's acting as resistance. So that's not entirely positive. I wouldn't just go ahead and, in my opinion, again, you're welcome to fade me. Wouldn't exactly just start shorting it after, it's wicking a little bit. But any jump up, and I think a good trade opportunities, any jump into this liquidity right here where you see these wicks underneath 1636 down to like 1630, we jump up and reject again. That's a good short opportunity in my opinion, because then you're kind of doing exactly what ETH BTC did, right? You're basically playing this motion up, up to resistance, and then you're shorting it back down to get another leg. So in my idea, a good trade, boom, maybe down here. So something like that would be an ideal trade into the weekend or into early next week. So, but Monte, I know you pay close attention to this. So is there anything standing out, on the either ETH BTC or ETH USDT?
Yeah, most definitely. I mean, we've been watching that ETH BTC chart really closely, and we had that descending triangle formation that had been intact basically all throughout the year. There was a couple times where it tagged the bottom of the triangle, but I think this is the point where we can consider it breaking down. I was wondering what the catalyst would be to either or to lead to that breakdown, and I think it was clearly like the buy the rumor, sell the news of that of the Ethereum ETF. People like bought into that hype, and that was quickly faded. Basically as quickly as it went up, it has gone down, and I think it will continue to grind down. But like you said, Nick, I wouldn't necessarily be shorting it here, just because it is getting beat up pretty bad today. It's down 2%. If anything, one thing that is interesting is now that we're seeing this kind of high beta relationship again between ETH and Bitcoin, is that does open up some opportunity for some pairs trades, I think, to kind of mitigate risk slightly. If you want to short Ethereum, maybe do so via the BTC pair and not the USDT pair, because one, that chart looks very bad. There are really kind of no levels below current price, and also you kind of eliminate a bit of the volatility and lessen the chance of you getting squeezed out on a flash move, which could definitely happen with ETH after it's been beat up a good amount in the last 5 days. So those are my overall thoughts. No real action to be taken, but if there were, it would be shorting that ETH BTC pair, as it's kind of in no man's land, down.
Yep, I don't disagree with you there. I think, anytime you see a dump that gets caught, around lunchtime, and I've seen CJ talk about this a lot, a lot of reversals, or at least a lot of stops in momentum will end up coming around that lunch hour. And so I always do get cautious, whenever I see that. So although, I'll tell you what, I would like to short ETH down to, 1600 right now. I think it's better. And because you have to ask yourself, and let's pull up the chart. There's just this kind of like a mental model. If you are shorting here, where's your stop? You're going to put your stop, at this local high right here, which you can barely call a local high at 1619, because you still got some liquidity, up here and maybe all the way up to 1625 or whatever. So if you're shorting here, what's your target and what's your exit? And so that doesn't look very pretty to me. So I'd rather just be patient. If I miss a dump, maybe you get a 1600 sweep, you can long that. Or if if you realize that 1620, ends up holding, and then, we end up getting that liquidity up here, this is a much better short opportunity. So you don't, and I think you guys just talked about it, yesterday. You don't need to overtrade, right? You just need to plan your trades, look for the opportunity, strike when the iron's hot. And if you miss a trade, that's life. The beauty of crypto is 24/7. There's going to be another one. So
Exactly.
CJ,
I want maybe not this show, but I want Monte to lecture us all on ergodicity economics and why the 95% who generally will overtrade in size positions
It is
optimally. It leads to almost consistent losses amongst like the median of market participants.
Yeah, it is an interesting phenomenon for sure. We could totally do an entire show on it. Like if I told you, oh God, we might be going down the rabbit hole, but if I said to you, hey Nick, let's play a game where we're flipping a coin, but it's not a normal coin. It's a coin that lands 60% heads, 40% tails. You take heads, I take tails. Would you take that bet?
I'm hammering heads every time.
You'd think so, right? And you'd think that would lead to long.
You got to discuss the payout, though. The payout is greater with the 65%.
Yeah, and yeah, you also have the
lower
benefit
with the loss, so you'd have that benefit as well.
Yeah, but you'd be very surprised to see the median return of that 60-40 coin toss with those adjusted returns. It's a very, very bizarre psychological phenomenon, but everyone assumes that 10% difference over time will lead to parabolic returns, but it doesn't. And that's just backed by statistics. So we could go down that rabbit hole, but I think that's a journey for another day.
Well, the way to cure it, or basically, if you were to stick and bet with that outcome and bet all of your money, the average, say you start with $100, after like 1,000 or 100 attempts of simulation, the average median only ends up with $7. So like a 90% loss. And so it's like, how could it be that low? Well, the way to actually fix that and to raise the median outcome is to bet a fraction of your wealth. And what I found is like the lower you bet, you actually increase portfolio returns and decrease portfolio volatility. But nobody does this because like instinctually, we all want to get rich. We want to make the big trades. So we bet too much. We bet too often. And, even if we're right, like we have to accept as humans, like we are going to suck at predicting future market prices of stuff that's like 80%, 90% random, because these markets are like highly, highly efficient discounting mechanisms. All right, I'm done now.
No, I think this is a good conversation, for the future. I think this is a good teaser for upcoming episodes where we can dig into this more. But I think is the most simple exercise for me is just if I can't answer my own question of where am I putting my stop, I don't take the trade. I think that's for the simplistic purposes, and I can't wait to dive in more, but I think that's just a really good benchmark. If you can't tell yourself something, you shouldn't be putting money behind it. So, but with that being said, we are going to wrap up the show, reaching our 35-minute mark. So, one final note is, of course, BingX, Didex are our exchange partners, Didex being decentralized, BingX being centralized. So you can take your pick of wherever you would like to trade, but both will offer you benefits, discounts, and more for trading with the links that we have below in the description section of the YouTube. And you can always find CJ, Monte, and myself at www.tradethechain.com. We have a 14-day free trial for those of you who want to check us out risk-free, get in the Discord, check the dashboard out, learn how CJ, Monte, and myself are attacking trades, what news information we are paying attention to, and of course, get along with the hundreds of other traders in every single time zone. So you likely will not be lonely in whatever journey you are taking on in our community. So with that being said, good luck, happy trading. We'll see everybody on Monday.